What's up, everyone? It's your boy HeeVee. Coinbase just released shocking numbers about their Q1 results ahead of the much anticipated direct listing. There is lots of new information about the coming Coinbase DPO, so let's talk about what you need to know. If you are not familiar with Coinbase or have not seen the first video I made about them, check it out here or click the link down below. I highly recommend you watch that video first because it will put this new information in context. This video covers the details of their Q1 earnings report and what that means for investors going forward, as well as how these results compare to previous periods. First, let's do a quick refresher of Coinbase. Coinbase is a crypto exchange that offers users the ability to buy, sell, and store cryptocurrencies, along with a few other product lines currently being developed, such as a developer platform. They are privately held and will be going public via direct public offering, or DPO, rather than a traditional IPO. Normally, in a direct listing, you would not issue new shares, hence there's no initial public offering of shares. However, due to a recent rule change, Coinbase will actually be issuing up to 114 million new shares in an auction on the day of listing. Trading goes live on April 14th, and the shares will be traded on the NASDAQ under ticker symbol COIN. Coinbase made headlines earlier this year after posting record high numbers for 2020, especially in Q4, following a major rally in the crypto market. They are back in the news this week because their Q1 earnings report showed a blowout quarter. So let's get into the content of that report and see how significant the numbers really are. We are going to compare Q1 2021 figures with 2020 to show just how extraordinary the last 3 months have been. The first number, and one that has been making headlines everywhere, is their Q1 revenue. Previously, we knew that Coinbase had generated $1.28 billion in revenue for the entirety of 2020. Q4, which was their best quarter in 2020, produced about $585 million of that. That was already considered a monster quarter, so to double that would have been insane. Shockingly though, they didn't stop at 2x. No, they tripled Q4 revenue. In the first quarter of 2021, Coinbase generated a mind-blowing $1.8 billion in revenue, 40% more than the entirety of 2020. Of course, the crypto market had an equally, if not more, impressive period, but clearly Coinbase capitalized on that wave. Although it is unlikely that this growth will be sustained for the whole year, if we annualize Q1 revenue, 2021 annual revenue would be 330% higher than 2020. The implication that has on their share price is tremendous. Remember, their valuation was already flirting with 100 billion. So imagine what it will be next week when they finally go public. But what drove this massive revenue increase though? In short, an equally massive jump in almost all their supporting metrics. Most importantly, trading volume. If you watched the last video, you know that 2020 saw $192 billion in transactions. That number was blown out in Q1 2021, in which $335 billion in transactions were completed on the Coinbase platform. 42% of all transactions in Coinbase history were done in the year 2020, bringing the total to about 456 billion. Q1 2021 added another 73% to that number. So they took an already huge pie and grew it significantly more. Growth has been significant in all other areas of the business too. The verified user base grew from 43 million up to 56 million. That means they added more users in the last 3 months than all of 2020. Monthly transacting users, or MTUs, which are people that make at least one transaction per month, more than doubled, going from 2.8 million to 6.1 million. That growth is especially notable because Coinbase states, quote, "Our transaction revenue is highly correlated with MTUs." And we know that transaction revenue is by far the biggest source of revenue at Coinbase. Additionally, the value of assets held on platform has grown to $223 billion, or about 11% of the total crypto market capitalization. That means 11 cents out of every dollar in cryptocurrencies is held just on the Coinbase platform. And finally, their net income grew by an equally impressive amount. Net income more than doubled, growing from $322 million to between $730 and $800 million. I'm telling you, this company is literally making money hand over fist. Also, their margins are tremendous, running roughly 44% net margins on the high end. This kind of profitability is extremely rare in startups like Coinbase. If you look at Uber or Lyft, they're struggling to pull a profit even now, years after going public, let alone before going public. And they intend to keep the growth going too. Management stated that they plan to quadruple spending on marketing, further growing the business. So they're going to take some of that net income and just plow it back into the business, gaining more users and hopefully more MTUs. What's going on here is amazing. It is significant for crypto and something we need to keep an eye on. This is one of the biggest ever DPOs for any industry and the first one of its size on the NASDAQ. We are witnessing a historic event. The growth and profitability of this company is nothing short of tremendous. They actually made more money in Q1 2021 than Tesla has during any year in their history. I think this increases investors' appetite for shares, and it is possible Coinbase goes stratospheric upon entering the public market. Demand for shares could be extremely high. Additionally, a continuation in the Bitcoin bull market, which I see as being highly likely, will send the shares even further. Coinbase could become a preferred holding for institutions looking to gain Bitcoin and crypto exposure without jumping through the regulatory hoops of actually owning Bitcoin. It's basically a de facto crypto ETF. In the last video, I mentioned that trading on private markets indicated a possible valuation of $100 billion. That valuation did not include Q1 results, so it is certainly higher now. In fact, if we use the same earnings multiple that we saw in the last private auction of 245 and multiply that by just Q1 earnings per share, we get a share price of $555 and a valuation close to $150 billion. That number is implying that Coinbase doesn't make another dollar for the rest of 2021. And additionally, the multiple I used was decided by investors at a private auction, which has a much smaller demand pool than the entire market. There is a chance that the market cap could balloon, and we see Coinbase worth $200 billion in relatively short order. Now, all this is very exciting news, especially for shareholders. However, growth at this level is likely unsustainable for a number of reasons. Next, let's talk about revenue projections and risks to the valuation of Coinbase. So far, we have seen that Coinbase knows how to make money, especially during bull markets. They have shown growth cycle over cycle, but those cycle peaks are usually several years apart with lulls in between. One risk to the valuation of Coinbase has to do with the intense volatility of their revenues. We know they're pulling close to $800 million in net income for Q1, but they actually lost money in 2018 and 2019 after having a superbly profitable 2017. By this token, 2021 could be another blowout year, followed by 2 years of unprofitability. Something else to think about is the growing phenomenon of media attention and social hype driving up asset prices. Right now, there is a tremendous amount of hype around Coinbase and Bitcoin. It is obvious why. When we look at the growth in Bitcoin price and the subsequent growth in trading activity on Coinbase, anyone invested in either Coinbase or Bitcoin over the last year has become significantly wealthier. With Coinbase going public in less than a week, demand will be sky high for shares. That could lead to a big jump in share price, followed by a longer-term decline if hype fades and the Bitcoin bull run slows down. Given the high correlation between Coinbase revenue and the price action of Bitcoin, investing in Coinbase shares is basically another way to gain cryptocurrency exposure. However, this exposure also greatly increases the risk of owning Coinbase shares. On the Q1 earnings call, their CFO, Alicia Haas, said, quote, "We may or may not provide a detailed outlook on a go-forward basis due to the inherent unpredictability of our business. Our revenue is highly correlated with the price of Bitcoin and crypto asset price volatility. We cannot forecast the price of Bitcoin any better than you can, and as a result, it is very difficult to accurately forecast our revenues." Generally, investors do not like that kind of uncertainty as it adds risk to the asset. That phenomenon could ultimately lead to greater volatility in the price of Coinbase shares and keep some institutional investors away. Clearly, Coinbase is something we're going to be keeping our eyes on. To recap everything we just talked about, Q1 was by far the best quarter ever for Coinbase. All the important fundamental metrics are rapidly growing, but an investment in this company carries a lot of risk. Now, after hearing all this information, would you rather buy Coinbase stock or just Bitcoin? Let me know in the comments down below. Thank you for watching today's video. If you learned something, hit the like button. If you want to stay up to date with relevant topics about Bitcoin and cryptocurrencies, subscribe. I hope you all have a great day. This has been HeeVee, and I will see you in the next one.